Hello and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on this episode, I'm joined by Gianni Kovacevic, an investor, author, and expert on global energy. We're going to discuss the commodities he believes will outperform up ahead, the best ways to play what he sees as a massive bull market on the horizon for copper, why uranium enthusiasts might need to second guess their thesis, and so much more. I hope you'll enjoy my conversation with Gianni Kovacevic. So I want to start today's interview with a broad question, as I often do, to get an idea of where my guest is at, and that is, what are the main themes and trends you're currently watching when it comes to the economy and financial markets that you think more investors should be paying attention to?
Well, I think everyone is waiting for Mr. Trump to take office on January 20th. And then with that's going to come a few very important themes. I'm fascinated by history, and I always, when you look back at what's happened in the past, sometimes the headline news is actually not what people think is happening. And I'm curious to see what will take place with the Russian naval bases that were in Syria, this Taurus base that they've put billions into. And the fact that Donald Trump was in Paris, Mr. Zelensky came there, he's been very adamant that he can solve this on the first day. You know, that's hard to do unless a lot of the groundwork is already occurring. And it's going to be interesting to see how that plays out, because the Russians have that big naval base in Sevastopol, Crimea, and this Taurus base. Was the fact that this whole Syria thing crumbled in a week is anything to do with how this is all going to play out between Russia and Ukraine, and sort of this, which is going to be an uneasy truce or a ceasefire, or maybe it's going to be more like a North Korea, South Korea thing? Time will tell. The second part of it is the crypto and some of these guys that are getting involved with Trump, and they're whispering in his ear, and what impact that's going to have. And of course, tariffs. Is this going to slow down the global economy or stunt certain sectors as this clumsy sort of first year, and the saber rattling, and if our tariffs really going to come into play, and that's going to impact maybe a little bit more how we play commodities and the price of the commodities, particularly if we have a real slowdown in certain parts of the global economy. So that is, January 20th and all what's going to happen before then.
Well, before we do dive into commodities, I just want to quickly follow up on that and pick your brain on the DOGE, the Department of Government Efficiency, that is being headed by Elon Musk and Vivek Ramaswamy. Is this smoke and mirrors? Because, we've seen these promises before. I think during the Reagan administration, I forget what it was called, but there was another sort of department created to clean up excess government spending. That obviously did not work out as intended. And they're up against a math problem, as far as I understand. How do you think they could actually make an impact here when it comes to debt and deficits in the U.S.?
I think it's going to be interesting. From what I heard, it was actually a little bit comical, but they were deadly serious, is that Musk wants to actually have a live board where there's going to be a winner, the stupidest spending in American government, where, and that's going to be interesting to see how that plays out, where they're slashing and exposing what's going to be shame. There's going to be certain areas there where billions are spent on very little, or people that are just, doing nothing. So there's a lot of inefficiency there. I think it's real. I mean, how much unemployment that's going to cause? I mean, we're talking about 1 million people or 500,000 people that are going to get let go or repositioned or something. But the real money is being spent on stupidity, renting of offices and procuring ridiculous things for far too much money. And a little bit of corruption will be there too, because if you're procuring something that you shouldn't have procured for a really high number, so I think it's real. I think they're gonna save some real money there.
Interesting. I want to hone in on the commodities sector now and ask you which commodities you think are set to outperform up ahead and why.
It's still electrification, no matter what all the negative headlines people get. The enabling of electrification, this is adjusting. So of course copper, but copper is going to be limited in sort of these spikes that we get. I've said that in numerous interviews that I've done recently, and it's going to follow roughly the aluminum price, or the aluminum price is going to follow the copper price. And that ratio of 3.5 to 1 is what we're going to follow. But I don't believe we're going to see sustained, really super high prices. It's going to spike. Speculators will push it down because nobody wants to pay high copper prices, and we're looking for higher plateaus every time over a batch of 2 or 3 or 4 years. And right now, copper is trading in the sort of 420 range here at the end of December. So it's an okay price, nowhere near an inflation-adjusted all-time high. That's probably more like around $7 or $8. So we'll probably see that. Won't stay there, but we'll probably see that. But I'm still the most important commodity right now as a speculator. If you're looking to make real money, it's just been beaten up is lithium. And I think we can get into that later. But lithium is still something that all the evidence is pointing to. There's going to be the revenge of lithium. And you're going to see, I think, eventually rising prices there. And because the shares are so decimated, there's a return to be made there. People should still follow it, even if they don't like it. It's stay current.
Hey guys, just a quick break to hear from today's sponsor, ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. Yeah, we're going to talk about that in a second. I want to discuss copper first. For investors looking for exposure to the copper sector, what would you say is the best way to play it? Do you think it's a matter of position sizing, getting into the majors, the Freeport McMorans of this world, and then perhaps taking a stance of smaller allocations to more speculative, whether it's development or exploration, the junior miners? How do you see your average investor out there, how they should approach the copper sector?
Let's put that in 3 different buckets. So the classic bucket, I think, where real big money's made is the drill hole play. If someone's really smart people with really good science are drilling interesting targets, that's where a stock can go parabolic. And I'll give an example, not that we have people do their own research, but I started Copper Bank. It's now Faraday. I have nothing to do with the company. All the hard work that's taken place is with people that I'm not related to, but they're drilling and they got good results. Coppernico, Ivan Bebek's company, which I'm not familiar with too many of the people there, but it's an interesting target. I bought some of the shares. If they hit, I think that will do well. The second bucket is the takeout play. If a project that's been there for a long time, a lot of work has taken place, and there's a chance that someone's going to buy it out. Entrée Gold is a classic example. This is a 20-year-old story. And now Rio Tinto has encroached on that area that they eventually have to start working together. I don't believe Rio Tinto is going to start paying them big money. Entrée Gold is going to be gone, in my opinion. And that takeout will be done at a premium. Let's watch and see. And the third bucket is the school bus. This is a company that's got a lot of little components. It's not dangerous. They're not drilling. They have a lot of assets. And Horizon Copper, which is kind of tethered to Entrée, they own 24% of the shares of Entrée Gold. So if Entrée Gold's taken out, they're going to have a lot of cash. They got a 1.66% net profit interest in the Antamina mine in Peru. And they also own a 30% non-working interest in the Hadmaden mine in Turkey. So it's a school bus, but it's got a lot of potential to make, I think, a really good return for investors. So those are the 3 buckets that one could play copper, I think, the classic ways.
So lithium, let's talk about it. It doesn't seem to get people very excited these days. Obviously, we saw a run up in 21, 22. Prices went ballistic at that time. Since then, we've seen a massive correction, prices falling more than 80% throughout 2023 and into 24. You mentioned that it's kind of become a contrarian play now. So tell us what you see up ahead for the lithium market and why it's an area where speculators might want to have a look.
Well, people detest lithium. People detest critical metals. So I read in the Financial Times of London 2 days ago, the VanEck started this critical metals ETF in 2021. Did you know it's the worst performing ETF in the world? I mean, how much money has been sucked out of that, and what do? They sell all their holdings in all these companies. Well, guess what? That's why your favorite lithium stock is down 90% or 85%. And so there's a difference between, say, cobalt and lithium, because when they were having a hard time finding cobalt, they found a different way to make a battery, the lithium iron phosphate battery. And that is a huge growth area for batteries. But so if 10% of the weight of an NMC battery would be lithium, 7.5 or 8% of the weight would be in an LFP. And they are going to make billions of these batteries. And so there's a reason why Rio Tinto at their investor day last week, the biggest growth part of their business, lithium. Rio Tinto sees the growth in lithium over the next 25 years growing by 600%. That's a CAGR growth rate of 15 to 20% a year. I think they're conservative. Wood Mackenzie sees it growing by 800% in the next 15, 20 years. So don't lose any sleep at night. The lithium demand is going to be very strong. And then you have to look at, well, what happens if they start building solid state batteries? Google it. The 20 or so possible chemistries for these solid state batteries, lithium, Li is the first part of that chemical equation virtually every single time. And when you look at these sodium batteries, which people are talking about now, these are going to be heavier, dumber batteries. I used to see these sort of companies that were doing these big liquid batteries for sodium. This is going to be used predominantly in backup battery systems for wind and solar. I'm talking about a battery the size of a basketball gym. Not so much for cars, even though they are doing these wafer type batteries now with sodium. The efficiencies just aren't going to be there. And I think it's going to be sort of like an all components. And the growth of these EVs is still there. So the CAGR growth rate of lithium is going to be there. And I think for that reason, we are going to have a rise in the lithium price. And that's where the revenge of lithium will happen. We are going to see another mania. And I will submit to people, this is something what we'll see in the next sort of 18 to 36 months. So if you can make 5 times your money or 10 times your money to wait that long, I think it's worth following. And that's why people should be following lithium for the future.
Well, one metal I know you're not so bullish on, which we've discussed before on this show, on Peter Grandich's show, and that is uranium. So walk us through your thoughts there on why people might not want to get so excited about uranium.
It's sort of a good news, bad news story. Of course, there is this revival for nuclear power plants. Unfortunately, when you really look at the growth and what's going to be built, I think that's going to disappoint people. Although there is some revival, there is nuclear power plants being constructed. The biggest action is happening in China. We got about 450 reactors in the world. A lot of them are just very old, Jesse. A lot of these reactors have to be shut down. There was a forgiveness for some 80 some odd reactors in the United States. And I say this every single time when I do an interview. If you ask someone in the year 2040, will there be more or less nuclear reactors than today? So I'm going to speculate that it's going to be less. No one wins. No politician wants to drive these things forward to their constituents. No one's going to get reelected. No one wants to die on that political hill in the Western world. If you're a place like China, I guess they can sort of mandate that the reactor can be built and where it should be built. And so that drives us to uranium. The people that watch your show, they're speculators. And where the money can be made when the sentiment is good, I would say is in a drill hole play. If, just like copper, smart people with good science, lots of evidence, they can raise capital. If they can discover something in the uranium space, I think that stock's going to do very well. If you look at something like Cameco, which is more the school bus with respect to uranium, or UEC, Amir Adani's UEC, they've already moved 5, 6, 7 times. Can Cameco double again? Yeah, probably. But there's other places you could turn $1 into $2. And I think that if you're a speculator, and that's what we're talking about now, the mania has already occurred in uranium, albeit it can be another one. And what can derail all of that, God forbid that there would be an accident at one of these 450 nuclear power plants, game over. You can't sell your shares fast enough. And that's always sort of present, particularly with the older, there's those 300 older nuclear power plants. And you're going to start seeing the headlines shutting them down, just too old and ruinously expensive.
And yeah, some interesting points there. And I think that there has, I mean, a lot of people who have come to uranium recently, maybe they don't really realize that a lot of money is actually already being made in the sector. I'm super long uranium. I take the opposing view to yourself on a few of those points. But I understand your viewpoint as well. And I always like to hear the more bearish side of things. I do want to get your current thoughts on gold and silver markets as well. Obviously, gold has been a very big story, at least to those of us who follow the commodity space. Still not a ton of mainstream attention yet. But obviously, its performance has been fantastic. Silver breaking and staying above $30 for a reasonable amount of time now. Silver is one of the most kind of loved and hated metals in that the silver stackers complain more than anyone online about how the metal's just sitting there and not doing anything. I wonder if you have any thoughts about both the gold and silver markets and your expectations for them moving forward.
Well, gold is a currency. It's a denomination where if people have either lots of money or some money, and if you live somewhere where inflation has been traditionally very impactful, that's one way that you can preserve wealth. But we've now grown up with a generation of people that they have faith in crypto. I don't personally, but they do. And the headwinds that gold is going to face now is until January 20th occurs, and until the world just sees how this sort of warm embrace that they've done, that people around President-elect Trump, how that's going to be implemented and how that's going to impact other currencies. But it is impacting gold. We all know that. And there are many things or institutions or wealthy people or these entities that have lots of cash. They're comfortable owning these big cryptocurrencies, and there has been an impact. So can we see gold go to $3,000 or $4,000? Probably, but it's been this first run that we saw, which was shocking this year. It didn't move the gold shares. That was amazing to the bottom line. I met with Ross Beatty when I was in Vancouver, and with Equinox, that huge move in gold, but the stock didn't move. It's a business. This business is going to make a lot more money. And so as they start delivering their quarterly results, now finally there's been some sort of catch up there. But until we get to captivate the attention of the big money out there, there seems to be billions and billions of dollars that's very happy to be held in crypto and not gold, which always traditionally for 5,000 years would have been gold. We just have to accept that there is a change there. Silver, it has its industrial application, which I think is no pun intended, but a silver lining. So silver will continue. The demand will be there, both from a currency perspective and from an industrial application perspective. And so it wants to see its all-time high, was around $50, as everyone knows. So I would say silver is going to close that gap quicker than gold right now. So you'll see silver go through $50 because gold's already went through its all-time high before gold does the same percentage move that silver's already done. So silver's probably, if you were to say, where do you want to be? Silver and the silver shares, they're just like little rocket ships. When the silver moves, those companies do very well.
And I want to pull on that thread a little further in regards to the difference in valuation between gold and the miners, because that definitely has been a thing that surprised a lot of people. A lot of people thought, well, if gold's at all-time highs, the miners are a leveraged play on gold. Gold should go ballistic, and the miners should go ballistic, I should say. And, even looking at the majors, at Barrick and Newmont, they're underperforming. You have exceptions like Agnico Eagle, which is doing very well. However, when we go down to the developers and especially the explorers, it hasn't borne out how people expected it would. Why do you think that is, and what would it take for that valuation gap to close in your view?
So if we're talking about bigger companies with a 5, 10, $20 billion market cap, these investors, because junior mining people are speculators, let's be honest, they're not really investors. They're looking for something that can go 5 or 10x, which is why you want to play drill hole plays run by smart people, backed by good science and good evidence, okay? But these investors, they've been correctly involved in other stocks. They just keep going higher. The usual names, Apple, Tesla, Nvidia, all these names. So they don't care. They're playing these other sectors which just keep going up beyond perhaps fundamentals, but that doesn't matter because there's one guy, he walks into there's a cartoon. Imagine this Guy walks into a retail shop and he says, this, that, and the caption says, "Sir, there's no sense pointing at it. If the computer says it's not in, it's not in." No one cares. They don't care about the fundamentals. They will eventually when you have on the bottom line after quarter after quarter after quarter making more money. But the reason, I think, the main reason is because these global investors are just preoccupied following and owning the stuff that just keeps working. Buy more of that which is going up and less of that which is going down. So that's taken all the oxygen out of the room for these bigger companies, in my view.
Well, let me ask you this, because I have a lineup down the block of guests on this show who think the broad market is massively overvalued, set for a correction. Some think it will be a catastrophic crash. I've heard figures everywhere from 20% to 90% from certain guests that we're going to see the broad market fall. How are you viewing that right now? Because you could have said the same thing last year, and it's imminent. It's way too overvalued. It's all going to come crashing down. And yet here we are. The broad indices continue to make all-time highs. People keep making money. How do you view the broad market at the moment?
Are these companies overvalued? Probably. I mean, especially some of the ones that just they go up on a daily basis. NVIDIA was the market cap; it would go up on a single day. It's just absurd, And these people don't know what a bear market is. And I have friends in the States. When I did my recent trip, I was out of Croatia for a month. They buy all these shares, my California friends, and they buy it all on options. They don't even buy the share, so they get more torque. And the whole thing is hopped up on these option plays. So a correction will come. They always do come. When it happens, are we going to see a 20% correction on these 20 or 30 or 40 famous stocks? This is going to happen. I don't think that's any kind of a outlandish prognostication. But what I don't believe is going to happen is a long, painful bear market. They happen and the music just starts again. And, there's just so much money's been created in the world. Where else are they going to park all this money? They park it into US stocks. So waiting for could it be a 30% correction? Who cares? I don't play those shares anyways, but I mean, that's really what's going on there is this herd mentality. And even when the correction does come, I don't see something where they're going to collapse 70%, but that's just the way I see it, and so we seeing a 20% correction, yawn. People don't even care. They just get back on the horse and they start the whole cycle again. It seems that's what we've seen year after year after year, 15 years in a row here.
Let's talk about tax loss selling, because you mentioned before we hit record today that Canada's rise in capital gains taxes makes tax loss selling more advantageous for Canadians. Walk us through your thoughts there.
This is a real and present opportunity. So everyone would be familiar with the tax loss. You buy a stock, you sell it for less money, you get to take that against future gains. Let me give you a real example, okay? So I started a company called Lithium Bank, and we did that very quietly at the same time that I was the CEO of Copper Bank. And I do one deal at a time, Jesse. So we started it very quietly, very privately. And it was a unique deal because we have our founders' shares, which are held by the key group. And we raised money at very high levels. 80 cents a share, $4.5 million. We did $8.5 million at $1.50. We did $9.5 million at $1.90. And then $3 million at $1. The team exceeded all expectations. They allocated that capital. They had got 2 world-class projects, 2 of the largest lithium projects in the world in Alberta, lithium brine DLE projects. But just as I said with Van Eck, everyone's been dumping these critical metal companies. Didn't matter. Just sell them all. Lithium Bank is now trading at 28 cents. So if someone bought 100,000 shares in one of our previous financings at $1.50, and they now sell the share at 100,000 shares at 28 cents, so for 28 grand, they have a loss of $132,000. That's worth to them, it's like 50 grand, because they can use that against gains they've made elsewhere in the portfolio. So what's happened in Canada? When you had a capital gain in Canada, you used to get 50% was tax-free and 50% at the prevailing rate. They've now raised that to 66%. So you're effectively, the old example, you used to pay about a blended average of 25, 26%. You're now paying 34% on your capital gains, which is when people make money on real estate or shares. This is a big difference. So if you look at the Lithium Bank example, it's fallen out of bed with everyone else for all the wrong reasons, because the company exceeded expectations, allocated the capital, and on a per share basis, you have a tremendous amount of lithium resource per issued share. No one cares. So the logic is, why would someone sell that share? Because if they sold it at 28 cents today, which is what's happening, it's if the stock doubled, is not worth as much as the tax loss. The tax loss is worth 50 grand. So even if the stock doubled, it's worth more for them. They wait 30 days, they can buy that stock back. Tax loss on companies like that is a real situation. But if you look at it like when the Chinese write the character for crisis, if you keep going, it becomes opportunity. This is something, I laid it out. I think if you look at the details, this is an actionable thing to be following. But it's real, and for those, even though they're selling at a loss, it's an opportunity. They're making money by doing it. As long as they can jump back in the stock, even if it goes up a little bit, it's worth it for them on the bottom line. And that is what you're seeing this year. I think because you have these stocks have been so crushed. But any company you're looking at, they had to have raised money or traded at much higher valuations. Otherwise, it's not interesting. But that's something, and I think with Lithium Bank, people can just corroborate everything I just told you. But that's a actionable sort of something to look at right now.
Very interesting. I want to talk about mistakes. I spoke to the legendary investor Jim Rogers recently, and he's very adamant in talking about the mistakes he's made along the path of his career, how it actually made him a better investor in the long run. I'm wondering, when you look at the average retail investor, whether that's in the general stock market or perhaps specifically to the commodities space, what are the biggest mistakes you're seeing people make, and how can they be avoided?
Well, when the facts change, so do I. What do you do, sir? Of course, that's the famous quote by John Maynard Keynes. And I think for many people who buy junior mining shares, and you can sympathize, I think people watching this, that the propensity of people not to sell something, if it didn't work out, you have to pivot. Long as the facts haven't changed. And as I told you, with something like Lithium Bank, it's 80 or 90% less risky, which means it should be worth more, and it's 80 or 90% cheaper from where everyone else bought their shares. So even if you've been beaten down, it's okay to sell a loser and just reallocate the dollar. Don't take it personally. You're not the only one who's lost. I mean, the unit has went down. It didn't work out. But just pivot, reallocate the dollar. So a big mistake is people just don't sell. They wait, they think, oh, it's just 6 more months, or they buy more of it. When the facts change, you have to change with them. So for that speculation, we do eventually need to see a rise in the lithium price. That is the thing that's going to really drive those lithium shares, the good ones, the quality ones, higher. And it's a story of not if, but when. The demand's there. The demand will be there. The take-up, and the only way for new production to come on in a major way is that prices have to eventually start rising. So don't lose much sleep there. And that's, I think, some of the thing that many junior mining people don't do is just, fess up and sell a loser and pivot, do something else.
Yeah, very well said. I just recently learned that lesson myself, selling Global Atomic at a 65% loss after just problems kept mounting up with the company. And I had to sit down and be honest with myself and realize that it was emotion that was causing me to hold on to this stock, the hope that it was going to come back, the desire to not feel that loss. And then I just realized, I think this company has more downside than upside potential. And if I were to come into the market today and look at this company, would I buy it? And the answer was no. So I think that was the right choice. A tough decision to make, but like you said, you have to, when the facts change, you have to change your opinion along with them. Before I do let you go, I just want to end on the geopolitical landscape at the moment and how it impacts investment decisions. Do you see geopolitical events as pretty much noise? Do you think it's worth it for investors to pay attention to them and actually base investment decisions on things that happen in the geopolitical realm? or should they just focus on the fundamentals and ignore all that stuff?
Well, we're living in interesting times, so I think it is very important. And something that matters when times are tough, liquidity is very important. And that's one of the punishments you have if you're having a big position in junior miners is you don't have liquidity. So the advantage of being involved in big names is that you do get liquidity, but then if you don't put capital at risk, you don't have that opportunity for a return. So there's got to be some blended average there on how much should be kept as something liquid or just cash. Cash is a position. It's always good to have some cash, not to be fully allocated. And me, I always play deals, and you can convince me pretty quickly if you're a high quality person with track record and success. I don't need the 2-hour due diligence. I'm pretty good at, after about 5 or 10 minutes, I'm probably in, but at what level, But so geopolitics is going to be something that that's going to continue to be with us. So January 20th, big day. So let's see how that starts. And, hopefully nothing too radical happens between now and then, but it's a funny times we're living in.
Well, thank you so much for joining us today, Gianni. It's been a fantastic conversation. Before I do let you go, tell us about your book, My Electrician Drives a Porsche, Lithium Bank, anything else you want to talk about.
Well, my book that came out in 2016, I just recently skimmed through it, and the themes are very relevant. And I think the thing I'm most proud about is all the little wisdoms and sayings and quotes from famous, economic historians and financial people, and it really, I think, is relevant for the long term. And it's something that I hopefully people that have read it enjoyed it, but anyone that wants to read it is still available on audible.com in ebook, hardcover, softcover. And with respect to Lithium Bank, anyone that's followed me for a long time will know I only do one thing at a time. When I started Copper Bank in 2014, I'm a one company guy. I wake up in the morning, the only thing I wanted to talk about was copper and Copper Bank, and I did one deal. But at the same time, I wanted to have exposure to the one electric metal that was going to stay with us the long term. It wasn't cobalt, wasn't nickel, wasn't manganese, lithium. Lithium is going to be in the billions and billions of batteries that industry builds going forward, augmented perhaps in the longer run by these sodium batteries for bigger applications. And when I built that company, slowly, brick by brick, and it became I think a tremendously successful company based on how we were to raise capital progressively higher and higher. So there wasn't a lot of dilution. So all the projects that the company owns on a 100% basis, they control them. There's only 49 million shares outstanding. So as I've already articulated, it's 80 or 90% cheaper, but 80 or 90% less risky. And the team is highly motivated. The money's going to be made by everyone owning a lot of shares, just like Copper Bank. We didn't care about issuing warrants at Copper Bank. We wanted to own the shares. So the team's highly motivated. They're not in it for the long run to, year after year after year to continue. They're with the shareholder. And I think if people took a deep look at it right now, and I'm really sort of pounding the table, kind of like I did with Copper Bank, when Copper Bank was at 3 and 4 and 5 cents. And I give a lecture in front of 1,000 people, and timing is just good timing. I think it's the right place to be. It's a good speculation. And with the setup with this tax loss selling, I think it's a great opportunity, irrespective of the lithium price right now, for next year. And then we'll see with the lithium price eventually rising, as I believe it will in the next 18 to 36 months, then the revenge of lithium will start manifesting itself. And then it's going to become more and more so this story on page one, because right now it's buried way in the back. No one cares about it. And just look at Van Eck, worst performing ETF in the world. There's upside from there. We're closer to the bottom than we are the top.
Fantastic. Well, I'll put a link to both Lithium Bank and your book in the description below. Thank you so much, Gianni, once again for coming on and sharing your knowledge with the audience.
Thanks, Jesse.
And thank you for joining us today. This episode was brought to you by ARC Silver Gold Osmium. For all your precious metals needs, head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.